Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about this week's Fed meeting, how to prepare for a recession, and the standoff between Apple and Twitter. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Federal Reserve meets this week and is largely expected to raise rates by 50 basis points. How do you think this will affect the market?
Well, good morning, everyone, and good morning, Allison. Welcome to a Monday. Exciting week ahead with the Federal Reserve meeting. You know that they meet every 6 weeks, and then every in-between period, they release the actual minutes of what they're doing. So as a reminder, Wednesday afternoon, 1 p.m. Central here in Texas is when they'll automatically release at that moment the statement from the Fed. Which again is about a page. If you haven't seen it, it's about 2 paragraphs, not even quite a full page. And they also have a redacted, or not a redacted, but redline version that shows you the changes of the words between last meeting and this meeting. And that's, of course, what drives markets. That's what will drive markets all week long. Is, ahead of the Fed move, generally the market is pretty negative because you don't want to be surprised. There's more people in wait and see mode than there are people trying to get out in front of the Fed. And if you just try to get it out in front of the Fed, a lot of people do that through the use of options instead of buying the underlying holdings in case they're wrong. So that way you can limit the downside. What do I expect? I expect 50 basis points. I think Chairman Powell has been very good at forecasting pretty much exactly what's going to happen, and that's what's forecasted here. So obviously a 75 basis point rate hike would be a heart attack to the market, to be honest. Probably to the tune of 5+% that afternoon of a drop, if you will. I don't think there's really any chance of a 25 basis point or a zero, or holding steady. I just don't see that happening because they've been so good at forecasting. So I think that's what we'll have. I think the markets will probably be flat to down, even though they're up a little bit in the green today. But as far as the week, flat to down a little bit as we go into the rate hike meeting. And then Wednesday, Thursday, and Friday, I expect to be up. I think that'll put us on a better path. Even though we're still raising rates, we are raising them less than we have in the past. So it kind of shows that the Federal Reserve is over the hump, if you will. So it can kind of slow down things. And then, of course, the flight path that people expect is 50 basis points here in December, another 25 at the end of January, and then holding in 2023. And if we do that, the Fed hopes that that'll be that soft landing to avoid either a recession whatsoever or, making it a soft recession, that soft landing that you hear people talk about on CNBC. So overall, I think that's what we'll see, a little bit of pessimism going, a little bit of wait and see mindset going into Wednesday afternoon. But then I think we're going to see some green.
Next, the yield curve continues to be inverted, indicating that a recession is imminent. How should people prepare for a recession?
Well, to prepare for the, this is time.com, so Time Magazine. So, I don't vouch for them, but pretty widely respected name, at least as far as information. So here's what I expect is as far as the recession is nobody's got a crystal ball. So we don't know what's going to happen. As far as the inverted yield curve, that's again where the 2-year rates are higher than the 10-year. Normally you go further out in time, you would make more money on yield. Right. So that's a good concept. If you don't have that straight in your mind, what that means, take 5 minutes, pull it up in Investopedia and kind of educate yourself. Pretty simple concept once you kind of have it right. So this indicator is 100% at predicting recessions. Now it over predicts, right? So I commonly say it's predicted, like 35 of the last 9 recessions. So what does all that mean? When we hit an inverted yield curve, that means we've increased the likelihood for recession. Every recession that we've had has been predated by an inverted yield curve. But then again, it's only like 25% of the time that we actually go into recession when we have an inverted yield curve. Either way, the Fed is raising rates. The yield curve is inverted. A lot of things are negative out there, and there's some things you should think about. Before we even get into the list, though, I will say now's the time to be cautious, with your personal finance. So now's not the time to go out and get kind of crazy on the spending. Now, there's an interesting side note of that is it can become what I like to call the self-licking ice cream cone. In other words, if all of us think there's a recession coming, and then all of us decide to cut back our spending a little bit in preparation for the recession, that cutback in spending by everybody pretty much guarantees that there will be a recession. So it's kind of like, willing it in to happen or manifesting it, if you will, by doing that. But you have to take care of yourself and your family personally, right? So I would say now's the time to just dial a little bit back, maybe not get too crazy on vacations or other big plans out there. Check your own personal balance sheet and and go from there. So what does time say? They've got 5 things to take a look at for in preparation for a recession. Focus on budgeting and building an emergency fund. A lot of the folks I deal with obviously are kind of past the budgeting phase. Where you don't really sit down and need to detail your expenditures. But if this applies to you, you need to do it, right? If you need to budget, and if you're counting on really having an emergency fund in place in case you get laid off, which layoffs happen in the middle of a recession, right? So yeah, really focus on this and maybe just keep things nice and easy. Make sure that you kind of get through this recession and to the other side. And again, we don't know when it is, if it'll happen, that sort of thing. But make sure that you have the basics in place, if you will. Pay off a higher interest debt. Obviously, with interest rates going up, what you're paying on credit cards and stuff, or bad debt, if you will, that's not good. If you got a home equity line of credit out there, it may have been a great deal when things were down at 3%, but it's not a great deal when you're up at 5.5%, 6%. So take a look at your situation, start paying down debt that you can. And again, this is a holding situation. I would say the other side of this was that you would want to hold on to low interest debt, right? So if you have your house at 3% or below, you don't want to pay that off early. You want to focus on the high paying debt, if you will. All right, update your resume. People do get laid off. So that's one of the things companies do. Now, it's interesting because if a recession is imminent, you've already seen companies can use that as an excuse to lay folks off. In other words, that it would have been bad press for them to lay folks off if they do it out of the clear blue. But a company, the boardroom can say, hey, since everybody expects a recession, why don't we do the layoffs ahead of the recession? So it allows companies to kind of right size their workforce, if you will. Same thing with inflation. People say inflation's coming. People Starbucks can raise its price by $1, sort of thing, just because people expect that they will, because inflation is coming. So same sort of thing. You may feel you're super safe in your job. However, you have one boss, and that if they cut you loose, then you could be out on the street, which could be particularly poor timing in the middle of a recession because not a lot of people are hiring. So, this isn't something to freak out about. It's something to be kind of prepared for, is the message. Okay, the next one, get creative about saving. Yeah, I think, they talk about, adding revenue through a side hustle. That's not for everybody. But certainly if you are kind of the corporate, had the same job for years, same profession, now's the time to, maybe if you've always kind of thought about, hey, maybe I should do some consulting on the side, assuming your employer allows that. Again, you kind of have to navigate that. Now's the time to think about, how could I raise extra money if I needed to? So think about that. And then, be savvy about investing. Right now is not necessarily the time to take full market risk. I've been accused of being a little too optimist about how things are going to go, but I do think I am an optimist by nature, and I think we're going to be fine. However, you can hop into, there's really no need to go into corporate bonds right now that are paying that 5.5% when you can get a CD at 4.8%. And just kind of hold it through all this this mess. So there's conservative options that are out there. Higher interest rates do bring some options that traditionally have not been good choices, like CDs, back into play. So something to educate yourself about and consider.
Last, Elon Musk continues to call out Apple and has increased the Twitter subscription for Apple users. Will this affect Apple stock?
Well, this kind of annoys me. I do like Elon Musk. I appreciate that he's, works as much as he does to make the world a better place, and I believe that that's true. He's calling out all kinds of people, but With Twitter, if you follow in the Twitter files from the weekend, I haven't really read too much, but I've kind of caught the highlights, right? They've gone back and kind of proved that they did some, election interference. They blocked a lot of the pro-Trump stuff and Trump stuff, stuff he's putting out. So anyhow, a lot of tampering, if you will, and he's trying to clean that out. Well, he's cleaning that out in house, and then all of a sudden he targets Apple, and as a shareholder myself, as well as the largest shareholder, largest holding in the book, I was like, whoa, not good to be under his crosshairs. Tim Cook, we did a piece on this last week, I believe, or maybe the week prior. I think it was last week, where Tim Cook said, hey, come visit me, let's talk this out. And they did, and they got through some of the misconceptions out there. However, Elon Musk released this weekend that Twitter Blue, which is where you pay $8 to get your verified check mark. Really, it's kind of that big, let's get rid of the bots by making people pay, because if they're paying, it's obviously not a bot. But it's now going to be, if you see down there a little lower, $11 per month if you use Apple iOS. So why? I don't know. Again, there was the talk about Apple being banned, or Twitter being banned from Apple, App Store. That Tim Cook clarified that was not the case. They were never seriously considering that. I don't know if this is because of some of the higher fees that are associated. I think more will probably come out today or so. But I will say, Elon Musk did tweet early this morning, 6:50 this morning. He said the woke mind virus is either defeated or nothing else matters. Now, so we're going to peel that back for just a second. He has said some pretty hyperbole, had some big words, that he's used in the past about the fate of the world, and one of them, being AI is the biggest threat to civilization, that being artificial intelligence, meaning, robots will take over someday. And when robots can fix robots, they don't need humans, which, there's lots of movies out there on that. It's certainly an interesting concept. But he's talking about the woke mind, wokeness, all that being a virus that's defeated. And then it says, or nothing else matters, kind of implying the end of the world. I don't know. We shall see. I live in Austin. It's pretty, you do your thing here. Nobody really cares. Nobody messes with you. It's weird, but we kind of celebrate that. If that's woke, yeah, then I guess I'm guilty. But yeah, him targeting this, and of course, Apple's pretty liberal company. So I don't know, maybe there's some underlying issues that he has here with Apple's culture. But overall, is it going to affect Apple stock? I don't think it'll affect it whatsoever. Again, this is not really a hit on Apple. It's a hit on Apple users. But if you use Apple, I don't think $3 extra a month at Twitter is going to be able to move off your iPhone to some other type of phone, which other phones are great. But once you're used to the Apple ecosystem, there's no way you're leaving it, right? Everything just works, and that's pretty awesome to be a part of. So, all right, that's all I've got for you on that, Allison. I don't think it'll affect the stock. I'm not even considering selling shares here because of this, but I do want to hear this week, what he has to say and why of the price increase that with Apple, and we'll see if he sticks to it.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.